Who better to tell us what all this means but Mario Gabelli, the CEO of Gabelli Funds, and Diane Swank, chief economist at Mesirow Financial. Sorry, Mario. Ladies first. Diane, you get the first question. In all of the job numbers today, were there any soft spots? Were there any signs of weakness in there that you could point to?
Well, you know, as good as the numbers were, and I certainly celebrate, especially the backward revisions, the composition of job growth is still very heavily weighted towards low-wage jobs. And we'd like to see a reversal in that because we lost a lot of high-wage jobs to the Great Recession, and we've not seen that yet. In fact, 3/4 of the jobs created since the recovery began have been in sort of retail, manual labor, food preparation, where we saw a lot of the jobs created today, in-home healthcare, where we also saw jobs created today. So, you know, although we're grateful for those jobs, a lot of them are on part-time. The long-term workers coming off their long-term unemployment, that was great, but then we saw a surge in the number of workers having to accept part-time instead of full-time employment for economic reasons.
So these are sort of the partly employed workers.
Exactly.
We also see a fair number of discouraged workers, people still staying out of the workforce, not jumping in, right?
Exactly. There still is a large number of discouraged workers. They're down from a year ago. That's the right kind of trend to see. And this was the good reason to have a fall in the unemployment rate, a real improvement in the unemployment rate. So that's the good news. But, you know, this composition and the part-time nature of it is still something we worry about. And, you know, I think this is something we have to be concerned about going forward, because the longer people are out of the workforce, we're seeing the really long-term unemployed are unable to rejoin. And there's a lot of collateral damage that goes into the economy.
The revisions for the the March and February numbers were significant, 114,000.
Unbelievable. To have a month over 300,000, I mean, hallelujah.
I don't mean to nerd out here, but how do you miss 114,000 people?
Especially when a lot of them work for the government.
Yeah.
I mean, I'm sorry, that is really hard. And, you know, it really gets to the issue of how much of a margin of error we're dealing with here with these jobs numbers. And, you know, that's part of the problem is, you know, fool me once, shame on you, fool me twice, shame on me. Well, shame on me now, because these numbers have fooled us more than once. The good news is the revisions are going on the upside now. We'd much rather have them going on the upside than downside. The other part of the numbers I think we need to point out is that they decelerated. Even though March was a great month, all of a sudden, I mean, February was a great month, March and April did decelerate.
Slowed from there, from the winter pace.
They absolutely did. And April seasonals kind of favored some of those gains as well.
There were a lot of economic numbers that came out this week, and of course the Fed met and said we stand ready.
And don't fight the Fed.
And we stand ready either to add to our bond purchases or constrict those bond purchases. Sum up the week's economic data for us.
You know what, we're still sitting a very uneven recovery, and that's why the Federal Reserve still stands ready to do something. And what they, you know, they would do less if they had complementary fiscal policy that was helping the economy. Right now we don't have that, and so without that they're willing to do more, but they are limited in what they can do. And they're starting to discuss that. Are they being effective at what they're doing? That said, they're going to keep the pedal to the metal right through June and right through the summer. I think we're going to see this Federal Reserve with low interest rates for a very long time to come.
The job numbers that we came out today, let's circle back to where we began. Give it a final grade. Is it an A? Is it a B plus? Is it a B? What is it?
It's probably a B, which is better than we've been. We've been in sort of a C minus economy, but I never got a B when I was in school.
Diane Swank, thank you very much. Great to have you in the studio tonight for us.
Thanks. You're nice.
Susie, out to you.
Thanks a lot. So let's turn now to Super Mario Gabelli. Mario, you're a value investor. Is it getting harder for you to find value in a market like this?
Well, you know, we constantly look at annual reports, visit a lot of companies, and there's always something happening, particularly in the small and mid-sized cap companies. So it's exciting, it's good times, deals, mergers, financial engineering.
Well, by contrast, you're here in Omaha because of Warren Buffett's Berkshire Hathaway annual shareholders meeting, and this is a huge company. Actually, just a short while ago, they reported their earnings. Shareholders will be happy. The numbers came in way bigger than expected, both on the earnings and the revenue side. The stock today hitting an all-time high. It is now at $162,000. It's up 21% so far year to date. Would you tell investors to put new money into Berkshire Hathaway at this level?
Well, Susan, when I started our Gabelli Asset Fund, our first open-end mutual funds, we bought it was probably less than $3,000 a share. And during that last 25 years, you've had ups and downs in the world. At $162,000, I probably would want to own it. I want to keep it for the next 5 years, but I may not buy my entire position today. Book is $120,000. They're going to make $10,000 a year for the next 3 or 4 years. Book will grow, and I think it'll do okay over the next 10 years.
All right. There are some other value stocks you wanted to tell us about. Top of your list is Viacom. Reported earnings this week, not so good. Why,
well, this is
why do you like it?
This is a entertainment company. You know it as Nickelodeon. You know it as MTV. They own the Paramount Studios. Great cash generator, very little capital expenditures. They take the cash and buy back stock. And over the next 3 or 4 years, I think you'll make 50% plus. That's 17% a year. That's
so
quite
it's at $68 now.
Yeah, the VIA, the voting stock, is $67 or $68,
right.
and I think it'll be $100 in 3 or 4 years.
All right, tell us about the next one, Mondelez, ticker symbol MDLZ. Interesting backstory on this one. Why do you like it?
Well, Mondelez was a spin-off from Kraft, financial engineering. Irene Roosevelt went out and bought Cadbury, which is chocolates. She put it together with the Mondelez products, which were the global products. Now she has a global company, stocks around $31. Earnings will grow in the double digits over the next 5 years, and will capture, and Susie will capture the growing middle class in both India and China. A great global play.
And it has a lot of the basic things that people always want. You said chewing gum,
well,
chocolates.
Biscuits,
cookies,
confectionery, and chewing gum. Those are very large categories, growing very nicely, and they have very good positions globally. And plus, you have Nelson Peltz buying some stock, and maybe they'll merge.
That always helps.
And maybe they'll merge. So the stock has not lost sight of this.
All right, let's talk a little bit more about Berkshire Hathaway. So you've been coming here for 10, 12 years to these meetings. What do you want to hear from Warren Buffett tomorrow?
Well, it's basically reinforcing the notion of how capital is allocated. Concepts like where is he looking to put money? Why does he like companies like Heinz? Why did he put $12 billion, $8 billion in the preferred, $4 billion in the equity? And not complicated. He's made 20% CAGR for 40 years. So if he only does 10 compound annual growth rate on book, if he only earns 10% over the next 10 years, our clients will continue to double their money, plus we're large shareholders.
So what do you think he's going to say? What do you think is going to be the big headline from Warren Buffett tomorrow, whether it's about the markets or the economy?
Well, you know, Warren always likes to tweak something, whether it's the notion of the flavor of the day, which is dividends. Why not pay a dividend? Why not split the stock? What is he going to do with his $56 billion that he personally owns of the stock? And where is he going to make acquisitions? And what is he going to do with regards to the operating earnings? The housing market's booming. He's going to benefit.
There are going to be 35,000 people here hanging on his every word. We'll see you there tomorrow.
We'll be delighted to do that, and we'll do the same.
Thank you so much. Mario Gabelli, CEO of Gabelli Funds.